Hi, I'm Ellen Cookman, and today we're going to be talking all about gift taxes. So this is my second video in a series of 4 all about the taxes that we encounter when we're doing estate planning. And today we're talking all about gift taxes. So perhaps you have an auntie or a grandparent or a parent who's very generous and they want to give you some money. And you say, well, thank you. But they're wondering, how do I give you money without having to pay gift taxes? And what are gift taxes in the first place? In this video, we're going to be talking all about that. Okay, so first of all, what are gift taxes? Well, whenever you make a gift from one person to another, the IRS wants to tax those gifts, okay? And the tax is set at a steep 40%. So you might say, well, Ellen, I'm never going to give any gifts to anybody because that's ridiculous. I don't want to give away $1 and have to pay 40 cents on that dollar. Well, hold on. There's 4 main ways to avoid gift taxes, okay? And these are all written into the Internal Revenue Code. So these are all completely kosher. The first way that most people are aware of is what we call the annual exclusion amount. So every year you can give up to the annual exclusion amount as many gifts to as many people as you want. So, and in 2023, this amount is $17,000. It used to be $10,000. Last year it was $16,000. It goes up with inflation, and right now there's been quite a bit of inflation. So we're at $17,000. So that means if I wanted to, and if I had the money to, I could give away $17,000 each to as many people as I wanted. And my husband and I together could give away $34,000 each, all right? So it's a great way of making gifts. Now, the special thing about that type of gift is it has to be what we call a completed gift. And that's very important. We're going to talk about that in a second. The second way to avoid gift taxes is to pay for somebody else's medical expenses directly. So if a loved one has a hospital bill and you pay for that hospital bill to the doctor, to the hospital, then that's not considered a gift, or it's an exclusion from a gift. Okay, so you don't have to pay gift taxes on that. Same thing for paying for somebody else's educational expenses, all right? You can make a gift by paying for someone's tuition directly to the educational facility. You can't pay the person and then have them turn around and pay the facility. You have to pay the facility directly, okay? Then you don't have to pay gift taxes on that. And then the last one that's also very important is the unified exemption amount. So in 2023, you can give away up to $12.92 million over your lifetime. If you make a gift that doesn't qualify for the first 3, for the annual exclusion or payments directly to, for tuition or for medical expenses, then you need to report that gift to the IRS on a Form 709, which is a gift tax return. And I imagine the IRS kind of like a little, P counter in the background. And so they have a little ledger and they keep track of how many gifts you've given. And if you exceed that 12.92 million over your lifetime, then they get to start taxing you at that 40% tax rate. In addition, any gifts that you make during your lifetime, eat away, that you report on your 709 form, eat away dollar for dollar towards your estate tax exemption, all right? So let's say you make a gift of $100,000 to a friend. The first $17,000 is the annual exclusion amount, that's forgiven. But then the next, oh boy, $83,000 you would need to report on a Form 709, all right? And then when you die, if you're filing an estate tax return, you also have to know about your accountant will ask for the Form 709s, the gift tax returns, because that will decrease the amount that you're able to give to your descendants or to other people upon your death. All right, so that's why that's a unified amount. And I have made a video on estate taxes, all about estate taxes, and so you might want to take a look at that one as well. Okay, so remember when I said for that $17,000 annual exclusion gift, it needs to be a completed gift. That means I take the gift and I give it to you, and you take it and you say, thank you, Ellen, for the gift, and you're able to go spend it. Well, now what if I want to make a gift to a child who is not very financially savvy, or maybe they're very young, they shouldn't be managing it themselves. So I want to make a gift to a trust. for their benefit with somebody else managing it. Well, in that case, the child cannot take out the money and say, thank you. It's not considered a completed gift. So the $17,000 annual exclusion does not apply. So because of that, we've created some types of trusts where basically the child has a 1-month window to take that money. One of the types of trusts is called a Crummey Trust, C-R-U-M-M-E-Y, Crummey Trust. Now it's not crummy, like horrible. It's named after the estate of Crummey, right? So that's how we get all of our names, is whoever died, we name it after them. Right, so you can make a $17,000 gift into this type of trust, a Crummey Trust, and then the minor, for example, gets a notice that says, hey, you have 1 month to take this money out. And if you don't take the money out, it remains in there. Now, the minor knows that in order to get more of these gifts over their, over the next few years, they need to not take out the money. So they know that, but you can't really tell them that in writing, right? So this is one way you can make a gift to a trust, an irrevocable trust that the child otherwise can't access, okay? And you give them the notice. Now, as you may know, I specialize in special needs planning, and a lot of people want to make gifts to children with special needs. Now, if you set up a Crummey Trust for a child with special needs, that would interfere with their public benefits, because even that 1-month window that child would have to withdraw the money, that would disqualify the child from public benefits. That would be the trust would be a countable resource, all right? So we can't do Crummey Trust for children. So what do you do if you want to make a gift to a child with special needs? Well, I think the best vehicle for the annual exclusion gifts is an ABLE account, all right? So you can make a gift to a child for that child's ABLE account, all right? Directly to the ABLE account, and somebody else can manage the ABLE account. The child doesn't have to. And when I say child, it can be a 55-year-old child. Anybody can be a child, right? And the nice thing about an ABLE account is that it counts as the child's own money. So a gift to an ABLE account is considered a completed gift, right? Now, I have 2 videos on ABLE accounts. One of them is called What is an ABLE Account? And the other one is called FAQs about ABLE accounts. So I encourage you to watch both of those videos when we're done here. Now, of course, you would not want to make a gift, a $17,000 gift, directly to the special needs child, because that would definitely interfere with their public benefits. Now let's say you want to make a larger gift to a child with special needs. Well, how would you do this? Well, what you can do is you can set up a third-party special needs trust for the child, and then you can make the gift to that special needs trust. Now, keep in mind that entire gift would eat away at your gift tax exemption and also your estate tax exemption. So if you make $1 million gift, for example, to a third-party special needs trust, you have to report that on a Form 709, and it eats away dollar for dollar at your estate tax exemption. So just keep that in mind. Now you may be thinking, well, great, I love making gifts, and I have a child who's living in my house or wants to move in. I want to make a gift of my house to my child. Well, I have a caution about that. I actually made a video on making gifts of houses to the next generation. It's called, Is Transferring Ownership of Property to My Child a Good Idea? So that can be a great video to watch, because that does talk about gifts and possibly gift taxes. So hopefully you've learned some interesting information about gift taxes and how to make gifts to people without incurring a gift tax. Next, I encourage you to watch my video about GST taxes, generation skipping transfer taxes, which is an unusual tax, but it does apply to gifting and leaving inheritances. So I'll see you over there.